As I record this, it is about 87 degrees outside, um, which is pretty incredible considering it is mid-February and we're not in Southern California or Florida, but in Silicon Valley, or at least I'm in Silicon Valley. So enjoying the great weather. Of course, my wife wants the weather to be cold or at least rainy and windy in the winter here in Silicon Valley, but we rarely get bad weather anymore, even in winter. We get the upside of climate change, and it seems like we're getting better and better weather as the years that we live here. And it also seems like things might be getting better in the stock market. And today, I'm recording this after the close of the market. The market, specifically the S&P 500 or the U.S. market, had a very loud and clear statement today, and that is what I want to talk about, and talk about the strength of it and the validity of it, and how is this going to be a strong push through to more highs, or is this possibly a false breakout? Hey everybody, this is RC Peck, and this is my weekend podcast. And we're talking about the stock market, and specifically how the stock market is able to really digest all the news and information and data in the world. I mean, after all, the stock market is a gathering, a culmination, a grouping of hundreds of thousands, millions of people, hundreds of millions of people putting their money where their beliefs are, where their mouth is, per se. And it is the closest thing we have to knowing how the future is going to perform, because literally the stock market, use any indice, but we'll talk about the S&P 500, it has all the data. It has everything that Warren Buffett knows, and David Einhorn knows, and everyone else. If you don't know who David Einhorn is, he's a hedge fund manager, manages about $12 billion and is very good at his job. So, the market knows more than all of us, and it's digested the information. It's been digesting the last few months going sideways. Going sideways is not bad considering it had to digest a 40 or 50% move in the last couple years. So it's digested the information and it's moving higher. If you look at the price chart here, this is the S&P 500. It's not a tracking symbol, but the actual S&P 500. The red line is the 200-day exponential moving average, and you see two black horizontal lines. The bottom one is one you've seen before, which I've talked about, is if the market breaks below that, then maybe we should pay attention, and maybe we should kind of start to note, maybe start to tighten stop losses, maybe take some money off the table. And I've been letting you know with my alerts with whether we've been in yellow light mode. And it's typical when we're in green light mode to go between green and yellow and green and yellow. What's not typical is to have so many yellow lights very close together. And that's what we are getting over the last 5 months. But the market has digested the information it's needed to digest. And as of close on Friday, the S&P 500 is almost at 2100. To be exact, it's at 2096.98. That was the close. And in the history of the Earth, of the planet, the S&P has never been higher today in absolute points than ever before. So the market has broken out. The question then becomes, is this a real breakout? Is this moving up? Are we going to move up to that 2200, 2300 I've talked about in the past? And the question is, we have to look to other markets to get that answer. So one market I look to is mid-cap, specifically mid-cap growth stocks. And the reason I looked here is these are smaller companies. These are growth smaller companies between $10 to $50 billion in size, being compared against the S&P, which is dominated by companies that are $100 billion in size and market cap and bigger. So what you can see on the screen here is really for the last 15 months, mid-cap growth has done almost nothing. Last year it was pretty sideways, up about 6 or 7%, while the market was up about 12%. So it really underperformed that 1 year. But as of right now, just notice if you look to the upper right part of this price chart, it is a much stronger breakout than the S&P. And in fact, it broke out yesterday This is a little false breakout here. It tried to break out but couldn't and fell back in underneath this resistance line. And now it broke out to the upside. So the fact that a mid-cap growth ETF is leading the way, that is a very good sign for a healthy market ahead, if in fact you want the market to go up. And so what I want to do is look at and just compare the S&P 500 with this mid-cap growth ETF. And that's what I did on this chart. So if you look at this price chart, the blue horizontal lines just signify the beginning or the end of a year. So you have, where my cursor is right here, that's 2013. And if you look at that red arrow, you can see in 2013, mid-cap growth was greatly outperforming the S&P. When you look at this price chart, if the squiggly line is going higher, that means those mid-cap growth companies are growing much faster than the S&P 500. And that's what we had in 2013. And 2013 was a crazy good year, up about 42%. But then in 2014, you had this mid-cap growth sector absolutely underperform the S&P 500. Now, the S&P 500 ended the year up about 11%-ish, depending on how you played it. And, that's about it. But then, bottoming out in October, mid-cap growth has been outperforming the S&P 500. This is strong, just like it happened back in 2012, where mid-cap growth was outperforming the S&P before the new year broke. And that's, in fact, what is happening now. So I think this break to the upside is strong. Of course, we have to wait and see. No predicting here, but it is a strong move out. And with it, many other sectors are also breaking to the upside. The NASDAQ is, the Dow Jones is, small cap is, mid cap value is, small cap value, small cap growth. So we have all these different indexes that are moving and breaking to the upside, which is a sign of a very strong break, whether that move is to the upside or the downside. This one happens to be to the upside. So for those of you who have had difficulty over the last few months with the stock market going sideways, this is a sign that we have more upward movement in front of us. And I've talked about this over the past few months as Europe starts to print money, and they're printing 60 billion euros a month. That's just more money flooding into the stock market. It will find its way into the stock market, and it is. So what is the takeaway? If you have not gotten it already, the takeaway is the market is going higher, specifically the U.S. stock market, but also Germany is going higher. The German stock market's going higher. The European stock market's going higher. And the Russian stock market is going higher. We've looked at the Russian stock market from time to time. It's taken some big hits because of its war in the Ukraine, or Ukraine. I always say the Ukraine, but maybe it's just Ukraine. And it looks like, based on the price charts, good things will come to that region of Ukraine because of what the Russian stock market is doing. And what it's doing is it was going sideways for about a month or two, and it has clearly broken out into the upside, which is a good sign for all those people living in eastern Ukraine. The stock market often will move higher before a shooting war ends. This happened in the 30s. The stock market, my pronunciation, the stock market in the 30s bottomed and started moving up years before we knew that the United States was going to win the war. So pretty good indicator, best kind of crystal ball we have. And so far it's doing us well. Germany's going higher, Russia's going higher. Thanks everybody for being here. I hope you have a great weekend. If you're a guy and you're married or you have a girlfriend, it is Valentine's Day. Quickly run out and get something for that person. Have a great weekend. Here in the U.S., it is President's Weekend, which means my kids are off today. They're in the city at the zoo with my wife, Burgess. And Burgess is actually gone for the weekend at a girls' weekend. So I get the pleasure of being with my two little beauties, my almost 4-year-old daughter, Everly, and my 7-year-old son, Bowen. It's going to be the three of us for the whole weekend. So wish me luck in being one-on-one with them. And you guys have a great weekend, and I'll speak to you soon. All right, take care.